There are a lot of you out there trying to raise venture capital, and it can be challenging, it can be rough, but I want to encourage you as you're talking to people who may be posturing as VCs or claiming to be VCs, or even if you're dealing with a well established fund, there's one critical question that I need you to ask that VC to whom you're speaking, and that is, are you currently writing checks? It's as simple as that. Are you currently investing in startups? Are you in a position to invest in startups? Because if you're not clear on the dynamics of VC, there are only certain periods where a venture capitalist is actually cutting checks to startups. That's why you see VCs kind of stack funds. You'll see them have a fund for a couple years, and then they'll announce they're raising another fund. And then after a couple years, they'll raise another fund, because even though the life of the fund may be 10 years for that VC, the investment window into new startups like yours is very short. It's like 3 to 5 years, usually around 3 years. And so here are the dynamics that are at play. A person can be a VC while they're raising their first fund or another fund, but they may not be in a position to invest. So what happens is a VC, let's say it's a new VC, decides they're going to raise a fund. They may kind of telegraph that and be open in the market about the fact that they're becoming a VC, that they're trying to raise a fund. But while they're raising that fund, while they're aligning those limited partners and getting commitments to that kind of capital, they can't write checks to you. A, they don't have any money to write checks. And B, they have to hit what is called the first close before they can start allocating capital. Some VCs may try and raise the whole fund before they start allocating capital. So it's critical that you ask, are you currently writing checks? Because if a VC is fundraising themselves, they can't allocate any capital to you. They can't write a check to you. Then you get into the period where they're writing checks. So they're looking at startups, looking at potential investments, doing due diligence over that investment window of 3 to 5 years, whatever they've agreed upon with their limited partners, with their LPs, as to what will be the investment window. And then once they get past that period of time, that investment window period of time, there's actually a much longer period of time where they are VCs, they're running a fund, but they're only using that chunk of capital that remains for follow-on investments. And often, and by follow-on investments, in case that term doesn't make any sense, they're using that money to put more money into startups that they've already invested in. So they're retaining their position as that startup continues to raise more money. They have to buy more equity so that they can hold their position, because when they originally bought, that equity was much, much cheaper. And as the company continues to grow, that equity becomes more and more expensive. So they have to have a significant amount of capital to kind of plow into the startup to ensure they retain their equity position. So often, with a lot of VCs, that follow-on capital, that chunk of capital they use to continue investing and to retain their position is much larger than the chunk they use to make the initial investment. Those are just the dynamics and economics of the work that they're doing. So unless you are dealing with a VC who can cut checks when you're talking to them, are you currently writing checks? Are you currently investing in startups? You could be wasting your time with a venture capitalist that can't actually commit capital to you, given the current position that they're in. So if you're a startup founder, if you are attempting to raise money, attempting to raise venture capital, it is critical that you ask the VCs with whom you are engaging, are you currently writing checks?